She said, take your time, what's the rush? All right, we're trading the open again. This is a throwback trade. Tesla, we gapped up at the open. Hey, listen, like this video, please. Subscribe, comment down below if these videos are helpful in any way, even if it's showing you what not to do. So this is our dual space concept. Shout out to OV. Thank you, sir. I appreciate all you've done and how you've contributed to the trading community for free. All right, I value that. Now we're looking to enter this trade for $179. All right, $179. We bought a call when we were away from the 20, which is a no-go these days. However, this particular trade worked out for us because remember, we didn't at this point in time, I'm not knowing to fill in the gap as a green candle. All right, I'm not all the way in tune with the away and the near concept. All right, but nonetheless, sometimes it works in your favor. Sometimes, I mean, it's only two ways it can go, up or down. So even when you're wrong, you could still be right. So here we go, moving up. I panic sold this as soon as I got that first pump because Tesla will turn on you. Tesla is disloyal. So here we go. We touched 290.98, almost 291, and then we get rejected from 291. It's not time for 291 is what they said. And look at that, from 291 all the way down to 288 in one candle. So you multiply your delta from 291 all the way down to 286. That's a $5 move. All right, $5 move. If you would have just caught that move with a 20 delta, that would have been $100 right there or more. So we come down, we touch the top of the trap zone, the support level, and then we push back up. So before you can choose and decide, Tesla already then turned his back on you, going the other way, playing the 50-yard line. All right, so this is why a lot of people wait till 9:45. All right, 10 o'clock to enter their trade. So boom, we came back. That was a pullback, not a reversal. And then I entered the trade again soon as that red candle turned into a green candle. Boom, we entered, and now we're going for a new high. All right, don't forget to like this video, subscribe, and comment down below if you find any of this information helpful or useful. Because I'm going to do what I'm going to do. But man, so here we go. We are pushing. And we did come back down and touch the 8. So we are showing respect to the 8-period moving average. Now this looks a little bit wide, the distance between the 200-period moving average, that red line at the bottom, and then the other moving averages that are in the middle. All right, that looks a little bit wide. But when we switch to the options chart, you'll see that they look a little bit more narrow. So it's subjective. So that's something that I'm still working on here. The subjectiveness, the subjectivity. Is that right? Yeah. Oh, excuse me. All right. Looking for a new high, trying to navigate this particular feature. All right. So again, this is why it's so important to manage your position size. You should be sizing to loss. Scratch that. I'm not telling you what to do. I don't know what you should do. What I'm doing is I'm sizing my position to loss. So when I buy $178 option, it's because I'm willing to lose that. All right. So that should only be, the option should be about 10% of your, it shouldn't even be that much. I'm not even going to tell you. I think that it's very important if you're going to try to do risk to reward. You need to manage your position size, and your risk should be the cost of the option. Now, once things start going your way, then you can add contracts. Or if you're strategic enough to get in on a pullback, then you can add contracts on the pullback. All right, but you don't want to you don't want to, keep throwing money into a dying position. All right, so you should just let's lose one contract and one candle, and let's win multiple contracts and multiple candles. All right, so boom, we are in here. Look at that work. A tail bar from the top, a tail bar from the bottom, a lot of indecision right around the moving averages. Look at me. I'm shaking my head because I don't know. I'm in it. I'm picking the side, but I don't all the way know. But we are 5 minutes in, and we already got money in the bank. So that's the beauty of scalping. Let's get this money early in the morning. All right, we want to consistently make between $50 and $400 a day. We don't want to lose. So here we go. Up $32. Look at that push. That new high, that's not a bad place to take profit. That would not have been a bad place to take profit. But I can't see the percentage on this particular. Oh, yes, I can. There we go. So we up 50% right now. 52%. I got to take profit on that. I should have took profit at 20%. And here we go. Now I'm thinking, all right, let me get out of here. But again, it's a learning curve. I wasn't brand new, and I still was struggling. So all of my people that are new to trading options, start small. You can do $60 options, $80 options. You don't got to put up $300, $400, $1,000. You don't got to do all of that. Stock Market Daddy did that, so you don't got to have it like that. You heard? All right, so let's look. It's pushing back. Look, wiping me out. The disrespect. But then look, a tail bar. So Tesla got a nasty attitude and is very unstable and wishy-washy. So if you date this particular stock, just know what you're getting yourself into. All right, here we go. Looking for 20%. Looking to recover some of that money that we just gave back, or Tesla just snatched back. And at 20%, we're going to take profit and get out of here. All right, peace and love. Please like this video and subscribe to the channel, and I will see you in the next one. Peace.